So let's get right into it. Is this whole AI gold rush a true revolution, or is it a massive bubble that's just about to pop? I mean, that's the multi-trillion-dollar question, right? And lately, some of the world's biggest financial watchdogs, well, they're sounding the alarm and they are not being quiet about it.
Okay, so first things first, let's really dig into the official warnings that have sent this chill through Wall Street and Silicon Valley. And look, these aren't just whispers or rumors. We're talking about actual, formal statements from the very institutions that, basically run the global economy.
And here it is. This is a direct shot from the UK's central bank. They're saying point blank that this whole AI frenzy has pumped up tech stock prices to some pretty dangerous levels. And let's be clear, when they say sharp market correction, they're not talking about a little dip. They mean a sudden, painful crash.
And it's not just a one-off thing from the UK. I mean, literally hours later, the International Monetary Fund, the IMF, is saying the exact same thing. Their big warning is that financial conditions could turn abruptly. Just think about that for a second. They're basically drawing a straight line from all the AI hype we're seeing today to the moments right before the dot-com bubble burst back in 2000. That's a huge statement.
So, okay, what does a bubble even look like? How do you spot one? Well, economists have this kind of checklist, the classic warning signs. And right now, the AI market is pretty much ticking every single box.
All right, so an economist named Adam Slater points to these 4 key red flags. First up, you've got skyrocketing stock prices. Check, we're definitely seeing that. Second, high market concentration, where just a few giant companies dominate everything. Yep. Then there are stretched valuations, which is just a fancy way of saying companies are valued at billions more than their actual earnings can justify. And finally, and this one's a biggie, a wave of just blind optimism, where everyone just believes AI can only go up no matter what.
Now this chart, this is really interesting because it gives you a perfect picture of that high market concentration we were just talking about. Just look at this. A tiny handful of tech companies, most of them juiced up by AI excitement, now make up a massive 40% of the entire S&P 500. So what does that mean? It means if those few companies start to stumble, they could honestly drag the whole market right down with them.
So you take that level of concentration and you mix it with that extreme, almost euphoric optimism, and you start to get some very strong and frankly pretty worrying comparisons to another famous tech boom that, well, it ended in a bust.
I mean, just look at this side by side. It's kind of spooky. Stretched valuations? Check on both. Extreme investor optimism? Check. A market completely dominated by a few tech giants? Check and check. You really can't ignore the parallels between the dot-com bubble and what's happening with AI today. It's really hard to ignore.
And it's not just economists waving red flags either. You've got David Solomon, the CEO of Goldman Sachs, one of the biggest banks in the world, openly predicting a drawdown, that's a big market drop, within the next 2 years. And his reasoning, he thinks investors are so laser-focused on the best-case scenario for AI that they're just completely overlooking some very, very real risks.
And this right here, this is the perfect example of what he's talking about. It really highlights a key symptom. All this money is flowing based on promise, not profit. Just look at OpenAI. Its valuation is a staggering $500 billion, and yet the company still doesn't turn a profit. That's pretty much the textbook definition of a speculative bubble.
But, the people actually building this AI revolution, well, they see it completely differently. They're arguing that just calling this a bubble really misses the bigger picture. For them, this isn't just about stock prices. It's about, building the future.
So you have Jeff Bezos from Amazon, and he calls this an industrial bubble. And his point is really interesting. He's saying, hey, even if this thing pops, the massive investment it's driving creates real, lasting stuff. Things like data centers, powerful new chips, innovative software. So, after all the hype dies down, society is actually left with valuable inventions. Kind of like how the biotech boom gave us all these life-saving medicines.
And Sam Altman, the CEO of OpenAI, he's right there with him. He totally admits there are going to be some, as he puts it, dumb capital allocations and some short-term craziness. Of course, but he insists that the underlying technology is so revolutionary that it will eventually lead to just unprecedented growth. For him, the short-term froth is just a distraction from the massive long-term transformation that's coming.
Okay, so that brings us to right now. today, we're kind of in this in-between phase, right? The initial breathless hype is starting to cool off a bit, and the market is now starting to demand something a little more tangible. It wants to see real, practical applications that actually deliver value.
I love this quote from an analyst at Forrester. It just perfectly captures this whole shift. Every bubble inevitably bursts, and in 2026, AI will lose its sheen, trading its tiara for a hard hat. I mean, how good is that? The era of AI wearing a tiara of just pure hype, that's ending. Now it's got to put on a hard hat and prove it can actually get to work.
And you know what? This shift is already happening. The CEO of NVIDIA, for example, says the industry is moving past these money-losing chatbots. The real future is in sophisticated AI agents. These are systems that don't just talk, they do things. They can conduct research, they can manage complex logistics, they can deliver real measurable value that businesses will actually pay good money for. And that is how the industry plans to justify those sky-high valuations.
So, boom or bubble? The answer is probably a bit of both. It seems like a period of wild speculation is giving way to a new industrial reality. The hype is fading, the hard work is just beginning. But one thing is absolutely for certain, this transition is going to create a whole new landscape of huge winners and huge losers. And I guess the question we're all left with is, when all the dust finally settles, who's going to be left standing?